What is up, YouTube? This is the Working Investor. In this video, we're going to talk about news in the marketplace of the high yield ETFs with Yieldmax and a little bit of backdoor news from Difiance. And we're going to talk about the new Roundhill fund, RDTE, how I am impressed how it's functioning so far compared to the Russell 2000. Let's get into the video. So, as you guys, I'm sure a lot of you guys have seen the interview with Jay, the fund manager of Yieldmax, and Rod, Retire on Dividends. And they were talking yesterday about these new weekly pairs. The new weekly pairs are going to be YMAG and YMAX. They're going to pay every single week. They're basically, by listening to the video, I understand now that they're going to basically break their payments into 4 increments and just, pay a fourth of it every single week. And then you have all the other synthetic cover call ETFs and the synthetic covered put ETFs, the inverses. Instead of all paying on the same week, they listen to a lot of the retailers out there in the groups, and they decided they're going to stagger the payments, the distribution. So it's going to be Group A, Group B, Group C, and Group D. And listening to the interview, the way they spread it out is based on, they didn't want to have too many heavy high yield payers on the same week. They kind of divvied it up based on percent of payment. So you'll see like Tesla Crash is the bigger payment, so they're in Group A. Nvidia Dips is the next bigger payment, so they're in Group B. Coney Fiat is like the core high, dividend payer. They're in Group C, and I guess Misty is the high dividend payer in Group D. So I wanted to spread out the allocations that way. And this way you can get paid every single week if you own a collection of their funds or owning YMAC or YMAX. So those are some interesting ideas. Another thing, curiously enough, to think about this is that they're basically doing a 4-week rotation. And it comes out there are 52 weeks of the year, and it comes out that there's 13 times, instead of getting paid 12 times a year overall, right? Let's say if you own AMZ, you'd only get paid 12 times a year. But with this new rotation of every 4th week, you would actually get paid approximately 13 times a year. So that's something interesting to note. Another thing that Yieldmax has done, and this is really interesting, is that, and I've mentioned it in my previous video, and I agree with Jay from Yieldmax, this is actually the biggest news, that their prospectus had changed where they're more flexible. They're not just limited to synthetic cover calls only. They also allow opportunistic trades by doing call credit spreads. As you could see, I mentioned in my other video about Coney, they had 3 call credit spreads this past week in Coney to yield extra return. There is a fund out there, and it's called SPY T, and they do call credit spreads on the daily. So it almost, it almost like does it, it's almost better in a way, but different in a way, but because it's better because it's flexible and they're able to maneuver their tactics. So that is really, really interesting. I saw a post from Kamir, and this is his post, and I looked up the SEC, and you have to really, really dig around. It looks like Difiance are going into this 0 day to expiration game. I believe they do in the money puts for their funds, for the QQQY, which is on the NASDAQ, JEPI on the S&P 500, and IWMY, which is on the Russell 2000. If you notice here, they're going to change their names. It's going to start September 26. All the funds are going to change their name, not just their name, but I believe their strategy. They're also going to get into the 0 day to expiration game. I was reading up a lot on it. If I'm not mistaken, I think that it's not necessarily they will have to do every single day 0 day to expiration trade, but they have the flexibility to do up to and including 0 day to expiration trades, is what I understand. If I'm making a mistake, let me know. So you'll see here they changed the name. Instead of Defiance NASDAQ 100 Enhanced Option Income ETF, they're going to be renamed Defiance NASDAQ 100 in the same name, but just and 0 day to expiration ETF. Same thing with their JEPI. It's going to be and 0 day to expiration ETF. Same thing with our Russell 2000. Also, they're going to change the name of JEPI from JEPI. It's going to be called WDTE. Is going to be the new name eventually, just to keep an eye out on it. So if you notice that Yieldmax is starting to implement a lot of this this is just a fun way of thinking about it. Yieldmax is sees the demand and that Roundhill commands with the weekly payments, and they're pivoting to try to modulate a weekly payment system similar to Roundhill. And Defiance is looking at Roundhill. I don't know if they are. It's a fun way of thinking about it. And they like the 0 day to, they want to get into the 0 day to expiration game with Roundhill when it comes to their puts. It's a different strategy, but you can't compare it tomato and tomato. Now, speaking of Roundhill, I want to talk to you about how they are performing. They've been around for 3 trading days. They came out on the 10th of this month. And it's hard to see the chart here, but if you go, since they started in 3 days, they're up 8.78% in NAV. They've definitely captured the NAV. And then obviously like the IWM right now, so I did a little chart over here. So you'll see here RDTE opened at 41.93 is when it opened on the 10th of September. Right now, pre-market, as you saw, it's trading at $45.61 a share pre-market. So it's up 8.77, 8.78. It's almost 9%, up in net asset value in 3 trading days. It has not given a dividend yet because it's going to be giving a dividend. I looked at the distribution schedule. On the 27th of September will be the first dividend. And then it looks like it'll be weekly so far. And if you look at the, I know it follows the RUT, but IWM is also, pretty much the index of the Russell 2000. And on the 10th of September, IWM was trading at 208.72. Right now, I just checked as of a few minutes ago, pre-market, IWM is trading at $213.35. IWM is up 2.21% in the same 3 trading days. So this is insane that the RDTE, which is the Roundhill High Yield Dividend ETF with overnight exposure, synthetic cover call ETF on the RUT, is capturing more upside than IWM. I'm not sure if the premium that they've received is built into this NAV, net asset value, or not. But whatever it is, the total return so far is that it's doing great, and I'm really excited about this fund. I know it's too soon to call it, but I think it's going to be a great fund. Yeah, so that's what I really want to say. I wanted to talk about that we are living in the new era, because I was listening to some of the interviews with the fund managers, and they were saying that the SEC, I think they allowed recently in the past 3 years or so, option-based ETFs. And nowadays, you can get high dividends, 30%, 40, 20, 30, 40, 50, 100% yields. It's insane in this era. That means that people are able to get to financial freedom much, much quicker. If you get a 50% yield, you just save 2 times your salary. And if it can stay consistently, 50% yield, one would be able to ideally replace their income of their job. Theoretically, not a financial advisor, but it's a really, really cool way. This is why everyone is so excited. So we are in a new era right now, and this is really cool. Anyways, this is the Working Investor over and out. I hope you guys have a wonderful day.